Hello guys, welcome back to my YouTube channel. And did you guys miss me? Because it's been a couple of weeks since I dropped like a personal tutorial. Did anyone miss me at all? Did you miss me? If you missed me, drop it in the comment section. Let me see if they put are looking forward to my tutorial. Okay, I know the last time I dropped a tutorial, it was on how to build prepayment on Accruals schedule, and we spoke extensively about how to build a prepayment schedule, everything about prepayment, cash base of accounting, accrual base of accounting, and that was where we ended the tutorial. I promised us that there was going to be a part 2, which was going to take care of accruals, examples of accruals, double entry for accruals, and how to build an accrual schedule on Excel. See, if you're an accountant, you need to draw a seat closer. Sit down, get your pen and your paper, because this particular topic has been causing issues everywhere. There are a lot of accountants that they claim to be doing accrual basis of accounting, but in the real sense what they are doing is cash basis of accounting. What do I mean? There are people that if a transaction happens, for instance, they don't understand the concept of making provisions, accruals and all of those things. They will wait until whenever they are making payments for that particular transaction before they record it in their books, and that is very, very contradictory. When you do that kind of thing as an accountant, it means that you cannot make comparison between your financial statement on a month-on-month basis. So if I have a P&L for January and I have a P&L for February, I cannot compare, because there are some items that you put in your February statement that actually those things, those expenses where the benefit was spread over January and February, but you're capturing everything in February because you paid the money in February. In that kind of instance, your profit for February will be lower than what January profit was, and then there will be so much, it will be very, very difficult for you to make comparison, to do your trend analysis. So yes, as an accountant, you need to understand the concept of accruals. So let's get right into the course outline. The first thing I want us to understand is, what are accruals, right? Accruals can be revenue and they can be expenses. That's the first thing I want you to understand. Accruals can be revenue and they can be expenses. Accruals are revenue or expenses. They are revenue earned or expenses secured that impact a company's net income for which cash has not been expended. So what it means is that you rendered a service to somebody, for instance, but you've not collected cash for it. You have to treat that thing under the accruals, under accrual basis of accounting, right? Let's say somebody rendered a service to you, but you have not paid that person. That's an example of expenses that can fall under accruals, right? So yeah, let me give you more detailed examples. So examples of accruals are, so let's say for instance, in your company where you work, you guys pay your rent at the end of every year. So the rent for 2024 we paid by December 2024. Now what some accountants would do is they will wait until December 2024 to recognize that rent in their books, because I don't know for them, but that is when they will record it. But if you are claiming that you are using accrual basis of accounting, what you should have done is that rent for 2024, even though it was paid in December 2024, the question you're going to ask yourself is, that rent, what is the benefits for that rent? What are the period in which the benefit is being enjoyed? It's a rent for 2024. It means that for January to December, if you're paying 200,000, it means that you enjoy that 200,000 for 12 months. It is a rent, it is an annual rent. So it does not matter if it is December, you're going to be paying that rent. You need to make provision for it every month until December. So that by December, when you're making that payment, your December statement is not taking all the hit for that particular expense. What do I mean? Let's say you know that your company is going to pay a rent of 1.2 million for 2024 in December 2024. What you should do is every month accrue 1.2 million divided by 7, which is 100,000 naira. Accrue 100,000 naira in your books every month. Make provision of 100,000 naira in your book every month for that particular rent, so that by December 2024, when that rent is going to be paid, you already have 1.2 million in your liabilities account, and then when you're paying that amount, it's just a movement between your liability account and your bank, right? That explains it. Another example of accruals is insurance. Insurance, there are times that your insurance, you would have enjoyed the insurance before you pay for it. Another example could be your HMO, where you pay in arrears. You must have enjoyed that service, your CUG line, you must have enjoyed that service first before you make payments, right? So one thing that would really help you as an accountant in determining whether or not a particular transaction should be treated using the accrual basis is, you would ask yourself, this particular payment that I'm paying, or this particular payment you're going to pay by this time, the benefits, when what period is enjoying the benefit? If the benefit is going to be enjoyed for more than that period when you're making that payment, you need to accrue it. Let's another good example is your audit fee. So your audit fee is usually paid at the end of the year, but then the audit that they are carrying out is for, they are auditing your books from January to December. So it will be wrong of you for you to put all those money, to charge all those expense in December alone, that your December revenue, your December profit is taking the hit. Because that particular service that the audit firm is rendering for you is not just for your December account. They are reviewing your January account, your February account, your March account, April, May, June, and the likes, right? So what you should have done is, if you know that you're going to be paying an audit fee of, let's say, 2.4 million by the end of the year, you start accruing for it. So in January you make provision of 200,000, in February you make provision of 200,000, in March, and you do like that till you get to December. Like I said, one key way for you to know how to do this accruals, to always make sure that your books are in order when it comes to accrual based of accounting, is to make sure that whenever there is a payment that is going to be paid later, whenever there is an expense that will be paid later, you are accruing, you are making provision for it right now. So far, the benefit is being enjoyed in this particular month. It does not matter if the payment is going to be made like 1 year later or 2 years later. You need to accrue the benefits evenly. Right? So yeah, that's that about that. What is the double entry for accrual? So for accrued expenses, the double entry is quite easy. You debit your expense account and then you credit your accruals, which is a liability account. You debit your expense account, credit your liability account, and by the time when you're making payment, you debit your accruals account, that's your liability account, and then you credit your bank or your cash. That is double entry, right? Now the next thing we want to do is how to build an accrual schedule on Excel. So yeah, just come with me to Excel and let's quickly take a look at how to build an accrual schedules. See you. We are back here and we're looking at how to build a payment schedule on Excel. Just a quick recap of what I've said so far. I think that the main important thing for us as an accountant is to understand that every month when you're preparing your management report, you want to make sure that any expense that relates to that particular month is being captured, regardless of whether or not that expense has been paid for. It is very, very wrong for you as an accountant when you are preparing your management report and you forget or you ignore expenses that have been incurred in that particular month and not been paid, or you don't capture it in your books, right? Like I said, in practice, most organizations use accrual based of accounting, and if you claim you're using accrual based of accounting, accrual based of accounting state that revenue is recognized when it is earned and the expenses recognized when it is incurred, regardless of when cash is being paid or received, right? So yeah, as an accountant, every month, once you're done, you sit down and you ask yourself, what are those expenses that relate to this particular month? What are the benefits that we enjoyed in this month that we not paid for, that we need to make provision for? It is very, very important, so that when you're doing that, you can always make comparison. It will be easier for you to make comparison between your January account, your February account, and with your it will be easy for you to do month-on-month comparison, right? So let's get right into it. So this is a clean Excel sheet, and then I'll show you how to build an accrual schedule. So the first thing we want to do here is write the title accruals. Then the next thing we want to put here is put our vendor, and I will explain why. So the first thing we want to put here is, well, let me just explain as I said. The first thing you want to put here is your vendor. You remember that in your balance sheet, your statement of financial position, you only have one line for your accruals. So there are different things that will go into your accruals. There are different expenses that will go into that your liability account. So let's say you enjoyed lights for, let's say you guys in your office, you use this approach where it's at the end of the month, so therefore it's going to bring bill. So the bill for January 2024 brought in by February 2024. Even that means you're going to pay in February, right? But they're going to bring the bill by February. So you need to make provision for that electricity by January to capture, because you're enjoying the benefits in January. You shouldn't wait until you pay it before you now recognize it, right? So what you're going to do is, so that's one part, that's electricity. You may also have someone that did something for you, maybe your rent, that are going to pay at the end of the year, but you need to make provision for it in January. So there are different expenses that will come into that your liability account. So the right thing for you to do is, if you have a liability account for accruals and showing 2 million naira, you need to have a schedule that speaks to that 2 million naira, that shows the breakdown of people that you are owing that particular 2 million naira, right? So yeah, so the first thing you want to put here is the vendor, to show who exactly, what's the name of that particular vendor, right? The vendor. And the next thing you want to put here is your description, right? So you have your description here. My Excel is really acting up. Then the next thing you want to put is the number of the months from January to December. So you just drag this. Right? And then you have your balance carried down, right? Or and I can just call it balance. Okay, so this is what you have. And then if you've been following my tutorial by now, you know I'm a big fan of aesthetics, so just give me a minute. Let me finesse this. Let me make it look good, right? So just gonna make this bold. Okay, what did I just do? Okay, so I'm just gonna make this bold, should be, and then should I change the color? Let me change the color to deep blue, and then let me change the font to white. So this is good as it is, and then I'll come here and then here. So this is this. Let me use this side. I'll schedule. Let's make this work, right? Maybe not. Let's see. We'll just leave it as black. More than this is good. Then one last thing. I don't think this is central. That's the emergency. Okay, fine. And one last thing. Good to view. I don't like to see all those big lines. Then I'm watching. So let me remove the big lines. This is it. So this is what our schedule look like. One last thing here. Down here we have the total. Should be as well. Total is going to be some of everything also some everything here. And so you can just come here and drag to the right, Control R, fuse it, then come here again. Now for the balance is addition of this. So let me just use some this. Okay. So the first thing we have is let's like I always do, let's use an example. So let's say what example can I use? The name of the company is Quick Limited. Quick Limited has engaged the service of KPMG Nigeria to audit, to provide financial services for its 2024 FY financial year. They have agreed an annual dinner of 2.4 million naira. That's the second one. That's first one. The second one is Quick Limited. Quick Limited Quick Limited, Quick Limited operates or Limited as a post-paid bill arrangement with the electricity company the electricity company that provides them. The agreement is to charge them 3.6 million naira as electricity bill. Electricity bill for 2024, payable in December 2024. Okay, now it's me. So the first question is, Quick Limited has engaged the service of KPMG Nigeria to provide financial services for the 2024 financial year. They have agreed an annual retainer of 2.4 million, payable in December. Let me put it there. That's why something like perhaps payable in December. Payable in December. Payable in December. Okay, let me do one last question. The company is also expected to pay an annual insurance premium for the year 2024 by June 2024. The amount payable is 1.2 million. The company also has a policy of paying employees quarterly bonus, which is a certain percentage of their salaries. I think this is an exhaustive question. Now let's take it one by one. So the first question is, Quick Limited has engaged the service of KPMG Nigeria to provide financial services for a 2024 financial year. They have agreed an annual retainer of 2.4 million payable in December. So let's say you're an accountant, you work in a company, and the company they have an agreement with KPMG that will provide financial services for them throughout the year. And by December 2024, by December end of the year, you're going to pay them 2.4 million. Now, what some accountants would do is that in January, February, March, April, May, June, July, August, September, October, November, they will not recognize this thing in their books at all. Then by December, when they are making that 2.4 million payment, they will not recognize it in December as an expense in December. Now, so people, I mean, this is like I said, this is a very contradictory, and this is a very, what's the right word now? What's that word I use when controversial? God, English. Okay, this is a very controversial topic because there are some people that have the opinion that it does not matter. Well, if I recognize it in December, or if I recognize it from January to December, because it's still the same financial year. But I beg to differ. You know why I beg to differ is because on a month-on-month basis, you prepare management report and you share with management. They make decisions based on that report on a monthly basis. Right? So if it means that if you are charging all that expense in December, you cannot compare your January report with your December report because the difference will be too much. Imagine you taking a hit of 2.4 million in December alone. Meanwhile, the benefits for that particular audit services or financial services was enjoyed from January to December. But because you did not pay it in December, because you paid the money in December, you thought that it was fine for you to recognize the expense in December alone. No. As an accountant, That's why you need to understand this concept of accrual basis. It does not matter when you're going to be paying for an expense. Like this KPMG one, this example we're looking at, even though you're going to be paying the money by the end of the year, now the benefit of this particular thing, this particular financial services, is for the entire year. It is only fair that every particular month, every other month takes part of that particular expense, and you don't charge everything to one particular month. So what you need to do now is, the amount is how much? It's 2.4 million, right? What's the name of the vendor? What's the name of the vendor? KPMG. KPMG, right? So KPMG in Nigeria. Another thing I would like us to include this control shift to us. I'd like us to include this thing here. Let's include the GL, and then include, let's include the GL. Let's include the GL. So the vendor is KPM. The description is, what are we paying for? January, we're paying for, we're making provision. Now we're not paying because we've not paid that money in January. We're making provision. So what are we making provision for? What's the description? January 2024 share of KPMG annual retainer fee. Right? One GL is going to, you have a GL called audit fees, right? Yeah. How much are you recognizing? We are in January, we are paying the account for January. How much are you going to recognize? Remember that you're going to pay 2.4 million at the end of the year, right? That means that 2.4 million is for 12 months. 2.4 million divided by 12 will give you 200,000 naira per month, right? So you come here and say 200,000. Right? So this is that about the first question. This is what you're going to do every month from. This is what you're going to do. So this is what you're going to do every month from January to December. So what you're going to do every month from January to December, right? Let me reduce the font of this thing. Okay. So this is what you're going to do every month from January to December. When you're preparing the account for January, you recognize this 200,000. What's the double entry, right? So come here. The double entry is you're going to debit the expense account. Debit the expense account. What's the expense account in this case? The expense account here is audit fees. So you debit your audit fees. Let me put that in brackets. Debit your audit fees, which is an expense account. So you recognize that expense for January. And then you are going to credit your accruals, which is a liability account, to show that you have a liability. You have enjoyed the benefit of something, but you've not paid for it, right? How much is it? 200,000, and then here as well 200,000. That's that about that. So that's that about that first entry. The second one is Quick Limited has a postpaid bill arrangement with the electricity company that provides them with electricity. The arrangement is to charge 3.6 million as electricity bill for 2024, payable in December 2024. Now, there are some companies that they have arrangements with, like NEPA, right? PHCN, they have arrangement with PHCN to say that don't bring us monthly bill, just charge us a lump sum at the end of the year, provide us with light, at the end of the year, bring us a bill. Now, if you're an accountant working in such a company, it will not be fair for you to not recognize, because you are enjoying, even though the bill for the NEPA light or the PHCN light is going to be brought by December, you're actually enjoying the benefit in January, you enjoy the benefits in February, you enjoy the benefits in March. So why are you waiting to December to recognize that expense alone? Why are you waiting till December to recognize that expense? You should recognize it over the period that the benefit applies. So what you need to do is, you're going to pay, you know that as an accountant, you're going to pay 3.6 million by December for January to December electricity. What you do is 3.6 million divided by 12. It means that you are going to recognize an expense of 300,000 for electricity every month from January to December, such that by the end of December, you have 3.6 million sitting in your liability account. And when it's time for you to pay that NEPA 3.6 million, it is just a movement between your liability account and your bank, right? So let's come here. What's the name of the vendor? Let's say NEPA. Sorry guys, I'm just talking with this. Let's use NEPA, right? What's the description? January 2024 share of January 2024 share of NEPA bills, right? Of annual NEPA bills. And how much where is it going to? It's going to your electricity GL, electricity and power. You have a GL for that. That's where that particular thing should sit. So you debit your expense account, your electricity and power GL account, and credit your accruals account. With how much now? The 300,000. Right? Okay. The next thing is this company, the company which is Quick Limited, is also expected to pay an annual insurance premium for the year 2024 by June 2024. The amount payable is 1.2 million. Now, as an accountant, I mean, not just as an accountant, as a company, you always have an agreement with your vendors because you're also trying to manage cash flow. So even though you have enjoyed the benefit of something, you can always tell them that you're going to pay them in 6 months time, in 3 months time, or after 1 month after they send their invoice. So let's say you have an agreement with an insurance company, and you're telling them that your insurance premium for the year will be paid by the middle of the year, so you don't have to pay early by January. Now, what some accountants will do, which is also not right, is they will wait until June 2024 and recognize all the 1.2 million, everything, all that 1.2 million in June 2024. It is not correct because the benefit for that 1.2 million was not enjoyed in June alone. Forget that we're paying it in June. You cannot recognize all that expense in June. What you should do is ask yourself, this 1.2 million that we're going to pay in June, if for what period? It is for January to December. So it means that 100,000 naira is the expense that we need to recognize every month in relation to insurance, right? So this is what you need to do. Sorry. Okay, so what's the name of the company? Let's say ICO Insurance is the name of the insurance company where we have an agreement with ICO Insurance. Okay, so what's the description here? You have January 2024 share of annual insurance premium. Okay, so what's the GL? You should have a GL for insurance. That's GL you're debiting. So you debit your insurance GL and credit your accruals. With how much now? We said it's 1.2 million for the entire. That's 100,000. So in January, you debit this with 100,000. Right? Now we still come back to this question 3 because it has both a prepayment element and an accruals element. Okay? We'll come back to that. Right? The next thing is you know the job letter you're going to pass here for this 100,000. Debit your insurance with 100,000. Credit your accruals with 100,000. The next one is the company also has a policy of paying employees quarterly bonus, which is a certain percentage of their salaries. So you're working in a company that pays quarterly performance bonus, right? Every quarter they're going to pay bonus. So if you're in the company from January to March, you're going to earn the bonus by the end of March. Now, what some people will do is they will wait until March when that bonus is being paid for them to recognize it in their book. But then I do not subscribe to that school of thought because I am of the opinion that even though we are paying that bonus in March, it was earned from January to March. It's because you work for them. That bonus is a compensation for the work you did in January, in February, and in March. Not just the work you did in March alone. So March should not take the hit for all of the expenses. It should make provision for that particular bonus they are going to pay in March. Make provision for it in January. Make provision for it in February. Right? Even though you're going to pay it in March. So let's think, in this kind of situation, you would ask yourself, based on precedent, how much have you guys been paying out as quarterly bonus to your staff? So if you've been paying like maybe 200,000 naira as quarterly bonus every quarter, you can decide to actually make provision for that. So 200,000 every quarter, it means that in 3 months, in 200,000 every quarter, it means that you divide that 200,000 by 3 to determine what portion of it relates to January, what portion of it relates to February, and what portion of it relates to March. Right? Let's say you're paying 1 million every quarter, right? Let's say last quarter you paid 1 million out as performance bonus. So you use that in figure to make provision. Now your provision might be accurate, it might not be accurate. That is why it is a provision. But you need to reflect it in your financials. Don't wait until March when you're paying those bonus before you recognize it in your books. So this is what you're going to do. And when you come here, you have this performance bonus. So you come here, you say being provision for quarterly performance bonus. Okay, what GL is it going to? So if you have a GL for bonus or salary, we shouldn't be salaries. If you have a GL for bonus or staff, maybe welfare, or whatever the policy is, whatever GL that you have for included there. So let's say in this situation now, the amount that we paid as bonus for last quarter, let's say we paid 12 million. We paid 12 million last quarter as bonus, right? What we are going to ask ourselves is, we are going to assume that, let's say we do not have new staff, so we also make the same provision. So we are assuming that we are going to also pay 12 million as bonus by the end of March. So to make provision for this 12 million that we pay by the end of March, we divide this 12 million divided by 3. Remember, it's a quarterly bonus, right? It's for 3 months. So we'll make provision of 4 million every month in January, in February, and March, right? So the year you come here, you have 4 million. So what you do here is you debit your. So you come here, what you do is you debit your. Let me reduce the font of this thing. So what you do here is you debit your bonus account with 4 million naira, and then you credit your accruals with 4 million naira. So that by the end of January 2024, the amount showing in your accruals account in your balance sheet should be 4.6 million. And if anybody comes to ask you, Perpetual, we are going through the financials. If the owner of the company or the CFO asks you, Perpetual, I was going through the financials, I noticed that we have an accruals and a liability of 4.6 million. Can you give me the breakdown? You send this schedule to them. It makes your work clean and neat as an accountant. As I always say, you must have a schedule for whatever figure that you have on your balance sheet. So this is the schedule that speaks to it. These are the accruals that we made. These are the people that we are going to pay, right? These are the people that made up that liability in your balance sheet. Okay? Now, moving on to February 2024, we're going to make the same provision for KPMG. We'll make the same provision for NEPA as well. We'll make the same provision for ICO insurance, and we'll make the same provision for our performance bonus, right? So we do that the same. The double entry still remains the same. You debit your what's it called? You debit your expense account and you credit your accruals account. So by the end of, you can see the balance figure here is updating itself. So by the end of February 2024, the amount you should be having in our accruals GL should be 9.2 million. With this breakdown, this is the breakdown of the 9.2 million that will be showing in your GL by the end of February 2024. The breakdown is still is an addition of 4.6 million that you accrued in January and 4.6 million that you accrued in February. Now you did the same thing for March, do the same thing for April, May, and June. I thought we were going to come back to this question 3, right? So let me just fill this. So you come back to this, right? So this is what we have right now for January to June, right? Now remember, as at June 2024, this particular insurance, we've accrued how much for it? We've accrued 600,000 for it, okay? 600,000 has been accrued, right? But they told us that we made a payment of 1.2 million. We've accrued only 600,000 because we enjoyed benefit of 600,000, but we made a payment of 1.2. So this is a question that has an element of prepayment and accruals. And you need, I've dealt extensively with prepayment. If you missed the tutorial, please take your time to go through our videos. Maybe I'll include the link somewhere in this video where you can go back and watch that video that we did on the payment. So this is what you need to do. So you're making a payment of 1.2 million, right? This is double entry. You first of all credit your bank where the payment is going out from, whether your bank or your cash. It's 1.2 million, right? It's 1.2 million, 1, 2, 3. The next thing you want to debit is your accruals account. Remember that we had made a provision of 600,000, right? Under our liability, there's 600,000 inside this liability account that is for ICO insurance. Now we paid them, so we need to go and remove that liability to show that we're no longer owing them. So you come here and you debit your accruals. You debit your accruals account with how much? With 600,000. 1, 2, 3. Right? The next thing is, now we have 600,000 naira left. It means that the remaining part of the 1.2 million that we paid, we've not enjoyed the benefit. It is what? It is a prepayment. So you come here and you debit your prepayment account with how much? 600,000. Right? Sorry. With 600,000. And this takes care of the double entry. So by July 2024, when we are doing our Accruals account, we make provision for the KPMG, which is fine. We make provision for the NEPA, which is fine. We make provision. We are not going to make provision for the ICO insurance again. We're not going to accrue it. It is not going to come out from Accruals. It's going to be a movement between your expense and your prepayment GL, not your Accruals GL. Your Accruals is for something that you enjoy the benefit and you have not paid for. After July 2024, we've paid for this thing in advance. So it is going to be a movement between your prepayment GL and your expense here. So here will be 0, right? And then your performance bonus will also still be 4 million naira, right? Which is what we'll be accruing every month, right? So here, let's include one more column to show when we make payments. Okay, so let's call this payments. Let's see how I can capture that payment that we made so that I can reduce this our accrual balance. Okay, so when we made that payment in June, we need to let's put it here. This payment that we made for ICO insurance in June, we paid 600,000. We are not going to bring the 1.2 million here. We're only going to bring the 600,000 naira, which is the accruals that we paid, the amount that we accrued as liability, which you have eventually paid. So you come here and put 600,000. Put a minus sign in front. Right? So this is to show that by the end of July 2023, this is how much we have in our accruals GL. This is how much we have in our accruals GL, which is an addition of this. We add this together, it's going to give us 32,100,000 minus this 600,000 payment that we made, which is 31,500,000. Do you understand? So that is the breakdown. That is the breakdown. That's how to go about the check, so that you can also see whenever you're making payments and your accrual schedule speaks correctly to what you have on your balance sheet, right? So yeah, for July 2024, when we want to recognize the expense for ICO insurance, what we're going to do is we're going to debit our expense account, which is still that insurance account, debit expense account with how much? With 100,000, 1, 2, 3, and we're going to credit our prepayment GL, credit our prepayment account with how much? With 100,000 naira, right? So this is that about that. From July 2024, you are not going to be accruing anything for your insurance again because you have made payment in advance. From July 2024, it's going to be a movement between your prepayment and your expense account. And like I said, I did a video on prepayment. So this 600,000 prepayment that you paid in advance should be sitting in your prepayment schedule, and then you'll be amortizing it over the months, right? It's just me showing you the double entry. So yeah, this is a brief introduction or summary, not an introduction, sorry. This is a brief summary of how we should work on your accrual schedule as an accountant. I mean, I feel like I've touched on most scenarios that might play out in the company that you work. If you have further questions, please drop in the comment section and I'm going to attend to you. Thank you so much for attending today's tutorial. I hope I am not missing out on anything. I hope I'm not missing out on anything. Yeah, the template, this particular template, let me even save it. This particular template will be shared on the group chat. So if you are not on the group chat, you are missing. See, aside the fact that we do this thing that we do, I mean, I drop templates and we get updates on the group chat. Another important thing that we do on the group chat is you come and you ask questions. When you have questions, there are over over 1,000 accountants, sound accountants that can help you. So there's barely a question that you ask in the group chat that there will not be somebody that can help you with the answer. Aside from that, we do brain teasers as well. We ask questions and we with prizes. It's an amazing community and you should join. If you want to join, the requirement is you must have subscribed to our YouTube channel, like this particular video, and drop a comment that I want to join the group chat, and we'll send you the link to join the group chat. Thank you so much once again for joining this tutorial. Once again, please like this video, comment on this video, and subscribe to our channel. I mean, we put in so much effort into making these videos, editing it, research, and all of those things. And the least that you can do, I mean, your own little way of saying thank you is by liking this video and subscribing to our channel. It doesn't cost you anything. It is free of charge, but these are things that actually matters to us. Thank you so much once again, and I'm going to see you in the next video. Let me say this. Bye. Accruals schedule templates. Bye. See you. Bye.